So I look at tips from the standpoint of what it's signaling, and of course, the issue with tips is that it's based on inflation, CPI, and who really knows if that's actually the accurate way of measuring inflation. So funny because we always talk about inflation and deflation, but it's actually very hard to get down to an actual agreed upon, universally formed number in general. So I look at more tips from a sort of signaling standpoint as opposed to sort of the ETFs. Now, having said that, tips are unique, right, in the sense that they can provide some degree of inflation protection, and they can still be a risk-off play, even though risk-off plays tend to coincide with disinflation, deflation, because even though the inflation coupon aspect of it might drop, the flight to treasuries, it still would co-move in those kind of risk-off, high-volatility stock market periods. So I think tips are kind of an interesting way of playing risk-off from a sort of strategic allocation perspective, if you believe that reflation is here and that the Fed is going to get its way, which again I do believe they will. But at the same time, it's not sort of, I think, the ideal way to play reflation or the ideal way to play deflation. If you're tactical, the best way to play reflation tends to be equities, highly levered ones. If you're tactical, the best way to play deflation risk off is with long duration treasuries. Tips are sort of a way of just holding without necessarily having to sort of try to figure out which regime we're in.